CrowdStrike not moving much at the moment after hours. Okta way up. This is a stock that had been punished a couple quarters ago on their Salesforce momentum, and I know they've been working on that, and both kind of in the security space, attacking it from different directions. What does this tell you, especially after Palo Alto's results that people were worried about that came in better than expected?
I think, John, that these reports are really making the point I made earlier, which is if you're going to continue to drive upwards as a stock price at this point in the year, you got to really outperform in a significant way. And the stocks that are doing that are going up 6 to 12% after hours, and the ones that aren't quite giving a big enough beat to excite the street are trading flat or down a little bit. And it's also making the point for me that you look at Salesforce and you look at it trades at a much lower multiple, to Mike's point, than it did a year and a half, 2 years ago. It's a lot more inexpensive stock, and it's kind of gotten its act back together again. I think your margin of safety, if the market does react really poorly seasonally in September and October, is much higher with Salesforce than some of these up and coming companies that don't have any earnings. So I would be more focused on stocks and companies like that than ones where you're kind of gambling a bit.
Yeah, just to dig into that a little bit further, George, I mean, we can argue, and certainly it's been argued, that even with a pullback we've seen this month in the major averages, like the S&P, for example, that it's still expensive. Valuations are still elevated. How do you see it, and what does that mean, to your point, in terms of looking for value under the hood?
Yeah, well, Morgan, not to go back to the time-old cliche, but I feel like last year the market was a fear market, and this year it's slowly turning into a greed market where we're wanting more and more gains, and I'm worried we're going to rob from next year and the year after if we get too aggressive going into the year. And I really think there is a decent chance in the late fall, early winter that we have a short covering and feeding frenzy rally into the close of the year. And if you get over a 20 PE multiple on the S&P and you start getting into the 30s on the NASDAQ, you're getting in very rarefied thin air. That's going to make it a lot harder next year. So you could be stealing returns from next year to make this year an even more profitable one.